Welcome back. Well, let's get a check on what's playing out with all the major economies that we track. And we have John Mekwa with the details. It's inflation reporting season.
Yes, it is.
And some numbers are not looking good for some countries.
Somebody said this morning on one of our shows that is this the way we're going to hit the 15% target?
Right.
By this rebasing. And I know LCCI has come out. LCCI, CPPE, let's know that this is a matter of rebasing and changing of the methodology.
Not that your inflation
It's
dropped.
not just inflation has dropped.
Right.
As somebody said, go to the market today, compare prices between December and January. Are you going to see a 10% drop in the prices?
You're not seeing that.
So perhaps, I think you started the show by asking if we should even use the word drop.
No, we shouldn't.
Or maybe change.
Yeah, it has, it's a metamorphosis at this point.
I don't know. I don't know about all of that, Ladi, but good morning, everyone. This is the global news segment of Business Morning, where we take you outside Africa and outside this continent or Nigeria. We'll start from the UK this morning. Ladi did say it's inflation reporting season, accelerating faster. That's what we see for UK inflation than expected at the start of the year, eating into workers' wages and putting pressure on employers to boost monthly pay packet. I wonder if they will do that. The Consumer Price Index, that's the CPI measure of inflation for the United Kingdom, rose to 3% in January. This is according to the Office for National Statistics, and it's going up from 2.5% in December. That's a huge move right there, 0.5%. Well, it had been expected to be a smaller increase to about 2.8, but we see that it's gone beyond that. The ONS says that's a jump in the cost of meat, bread, cereals, and food bills generally, while a jump in private school fees after the government's withdrawal of a VAT exemption pushed up the cost of education services and added to this. Airline ticket fare in price, but not as much as usual, combined with a rise in fuel cost, pushed up the rate of inflation in the transport sector to its highest level since February 2023. But it doesn't seem to be that bad for New Zealand. We see for that country from their end, it's a cut. The central bank slashed benchmark rates by 50 basis points to 3.75%, marking its fourth straight cut as easing inflation offers the central bank room to boost sputtering economy. The move was in line with expectations from economists and marks the lowest the policy rate since November 2022. In its monetary policy statement, the Reserve Bank of New Zealand said that inflation remained near the midpoint of its target band of between 1% and 3%, prompting it to lower rates. New Zealand had reported headline inflation rate of 2.2% in the quarter ended December 2024, with price growth falling for 7 of the last 8 quarters. The rate cut also comes at a time when the country's growth has been declining year-on-year basis for 5 straight quarters to September 2024. The New Zealand dollar strengthened following this by 0.4% to trade at 0.568 against the greenback. And from there, we go to the world's second biggest economy, China. They're starting to see a rebound in the mergers and acquisition scene after years of decline as the government stimulus measures start to bear fruit, while pressure from Donald Trump's tariff is also driving industry consolidation. In 2024, China's M&A, that's mergers and acquisition activity, was on course to log its 5th straight year of decline until the final quarter of the year, which saw a sudden acceleration in activity. The value of deals conducted during that period jumped 78.5% to $128 billion from $72 billion in the previous quarter. And this, of course, according to official data. Deal making is also about to pick up, according to them. Industry watchers are following the story and are very optimistic about it. Now, Europe, HSBC now is, they've announced that there will be a share buyback plan worth $2 billion in its annual pre-tax profit. It rose to 6.3 5%, helped by sale of its banking business in Canada. For the full year, HSBC reported revenue of $65.85 billion. That's down from $66.1 billion in 2023. The bank's profit before tax for the fourth quarter nearly doubled from a year earlier to $2.3 billion. The lender had incurred an impairment charge of $3 billion in the fourth quarter last year, impacting its performance. Revenue for the reported quarter declined to 11% to $2.3 billion. HSBC says it expects to complete the announced share buyback by the end of the first quarter of 2025. Now to one of the hottest stories at this time around the world. It's the Trump tariff. That's what it is. Well, sentiments among single-family home builders dropped to the lowest in February due to concern over tariffs, which will raise their costs significantly, and the National Association of Home Builders Housing Markets Index dropped sharply by 5 points from January to a reading of 42. Anything below 50, we know it's negative for most of the indexes that we follow. Builders are already facing elevated mortgage rates. And the average on the 30-year fixed mortgage rate was above 7% for January and February, after earlier being in the 6% range. Home prices are also higher. And still talking about the tariff, President Donald Trump is on it again. This time, he said he would likely impose tariff on automobile, semiconductor, and pharmaceutical imports of around 25%. Yes, with an announcement coming as soon as April. You know, he did form that committee that's supposed to deliver by the 1st of April. So perhaps from the 2nd of April, we would hear more pronouncement. And Trump had previously announced 25% tariff on steel and aluminum that are set to take effect in March. And Tuesday's comments are his most detailed yet in specifying other sectors to be hit with fresh barriers if implemented. Now we have a correspondent in Washington. Maria Bird had to wake her up about 2 or 3 a.m. at this time in Washington. Hi, Maria. Good morning.
Good morning.
Yeah, so, I mean, the world has been talking about Trump since his inauguration, tariff, trade war, and all of that. But tell us, how is it in the U.S., all of these talks on tariffs? We just read about the home builders, how it's becoming more expensive for them, a drop in their sentiment below 50 and all of that. But in reality, living in the United States, how's the Trump tariff, what impact is it having on you guys?
Well, I think the biggest impact right now is individuals wanting to go out and spend. I think the question is whether or not, if they go out, as you mentioned, the price of building a home could potentially become more expensive starting in March. And there are home builders that are obviously thinking through what impact this might have on the materials they'll need to complete the projects that are currently underway. We oftentimes see new single home building developments saying sold out. And so we still see that at this time. We haven't seen the direct impact of what's been stated. I think it's predicted. I think some of the new developments that were planned for 2025 either could be stalled, potentially people could be looking at other avenues for that. But I think the average American is watching to see how this could have an impact if they had a plan, specifically, as you mentioned, whether it's to buy a home, buy an automobile. I think these new announcements around the auto industry and the imports around the 25% for cars that are made and brought in and imported to the U.S., these foreign-made vehicles, does have a potential impact. We're looking at potentially thousands of dollars increase in some of those vehicle prices, which were not seen previously. And so I think people are kind of watching, they're waiting. People are trying to see how this could have an impact, also seeing how this potentially could have an impact on employment. Obviously, the conversations are around, we're waiting until March and April to give companies a chance to bring some of this manufacturing to the United States, which then means employment opportunities for Americans. So people are trying to see how this will impact and if it will be something that Americans can do to increase their employment rates. As we know, we have been challenged ever since COVID around the economic stability. Inflation rates have had an increase. And also, as I've heard you mention before, people are also concerned about the dollars they're making. Obviously, with inflation increasing and not having an increase in wages, does have an impact on people's livelihood.
Yeah, I think another side of that is the migration policy. President Trump hasn't been quiet or about his determination to get illegal migrants or residents out of the country. And last week, I believe we saw the inflation numbers, and so one of the drivers was the price of eggs. And some people say the farms are emptying out because the individuals who do these menial jobs are these illegal migrants that are being chased out of the country. Are you feeling the impact of that? What are you hearing about the farms and all those menial job workers?
So I think the average American is definitely feeling the impact in the grocery stores. As you mentioned, the price of eggs and other goods such as that, specifically, as you mentioned, around those farmers in the fields, and how this the deportation, if it's having an impact on some of these jobs that traditionally are done by those who are new residents into the United States. So the real question is around, is there technology implications to this? How the farmers intend to be able to farm their crops, how they intend to do some of these things, as you mentioned, the eggs and a variety of other things that are done with these types of jobs. And so I think what we're going to begin to see is how the administration plans to address where farmers are feeling a shortage in labor work, how that will be addressed. And that, I think, we still don't know yet exactly how that's being addressed. I think that the question around inflation, we've seen inflation before deportation. So inflation is not a new issue for the United States. The real question is around those farmers who own these farms, who are directly seeming to be impacted, how they will have a long-term impact in being able to either recoup labor force or being able to use technology to address some of the labor shortage that obviously is being experienced.
Yes, so certainly, Maria. We'll see how Americans adjust, and perhaps President Trump does have plans, you know, to cover up the gaps that will need to be filled by those migrants. But thank you so much for giving us the insights into what's happening in the U.S. All right, so Ladi, that's it. The average American, well, a lot of wait and see seems to be happening. So we know we used to do wait and see for the market, but it does seem in the United States now, there's a lot of wait and see going on, both in the area of the tariffs, which we hope not though, but according to President Trump, might start from the 2nd of April, and then also the issue of the migrants being taken out of the country and what will happen to the farms and those menial jobs that the migrants used to take care of in the U.S.
And so much to also expect for, you know, our diaspora out there. You know, we've heard from Dr. Muda Yusuf saying that, you know, diaspora remittances, that's at risk, you know, with the immigration policy changes we're seeing.
Certainly.
So a lot to wait for.
Yeah,
you know, at this point.
But I think the U.S. can also look the way of the U.K. I remember when they just opted out of the EU, and then they also had their paperwork and bureaucracy, which I think Brexit, which they're still dealing
with Brexit,
up till now. There was a time there was petrol scarcity in the UK because there were no truck drivers. Those individuals had been termed illegal and had to leave the country and all of that. So I guess President Trump will have some people look into some of these scenarios.
We all need each other.
Yes,
legal immigrants.
Legal or illegal.
Legal, we all need each other.
Exactly.
At this point. Thank you so much, Edie, for bringing us all those details there for what's playing out in the global markets. But we'll catch you again at 1 p.m. for Business Incorporated. We'll get a check on what's playing out with the markets. It was a bad start yesterday after getting the rebased inflation data for January. We'll get a check on how the markets are doing. That's at 1 p.m. today on Business Incorporated. Thank you for watching. From me and the team right here at Channels HQ. Bye for now.